All right, welcome everybody. It is August 5th, 2025, live trading here at Income Navigator. So we're going to jump into kind of our normal live trading review. Let's look at a bunch of charts. Let's look at some trade opportunities and ideas and see what's going on out there. No real shock today on the markets. We're down, which fully expected after yesterday. So if you played that correctly on your zero DTE this morning, I thought it was a pretty easy call credit spread or just buy puts either way this morning. Uh, Yesterday was a pretty big bounce, but the markets were still a little bit in that downtrend. All right, let's get into it and jump in here. Let me get off the screen. All right, we'll do the best we can to keep this thing rolling along. Let's just jump into it. So let's take a look at ES. So yeah, big turnaround day yesterday after Friday's big sell-off where we broke through. And if we look at this thing, we broke down through the 8 to 21, came down to the bottom of the Bollinger Band, which is pretty tight. Bounced nicely off that yesterday, ran back up to the 21, all the way to the 8, and then today just giving back to the 21. Here we are entering, this seasonal period where maybe things are a little bit weaker. Overall, we still have a bunch of things out there affecting the market. Mainly, you had some pretty weak jobs numbers last week. So last week, a lot of economic data with the Fed as well. Fed not moving on interest rates, no real shock there. So that's really not a non thing. Uh, didn't expect as bad of jobs data as we got. So that's not great for the economy to see the jobs data falling necessarily. And then you had a little bit of the whole Russia nuclear thing. Certainly that doesn't help either. Throw some things into the mix, and then tariffs going into effect with, I don't know, 8 million% tariff rates on people and retaliatory tariffs against people that support Russia, like India, and then India thumbing its nose at the US. It is what it is. There's a lot of that out there. Most of it just kind of noise back and forth, a lot of negotiating tactics, but uh, U.S. is cranking out tariff money. So I guess that's a good thing for the United States. Not a great thing for a lot of individual companies out there as we trade them. But I'm not a big fan of trading companies. I trade more indexes, and I still think things look decent overall. If you take a look at the right-hand chart here, I mean, this is a weekly chart, and if we go back, a pretty good amount all the way back to 2021, 2022. I mean, this is a uptrend here. If you look at the 200 day on the weekly, that thing's just been sailing along upwards for, I don't know, I can't, since 2021. So we've been in this uptrend since 2021. And if you look at we have different charts for things, but also if you look at the 8 and 21 EMAs on the weekly, and there's some other indicators we can look at. I mean, those are positive. We had a nice bullish cross on those, and as long as those things are positive, and we clicked positive back here November of 23, and we were positive all the way to here. Then it said get out in March, and then it said get back in here in May on May 27th. So if you look at the weekly, things are bullish. That 8 is getting further from the 21, which means things are pretty strong to the upside. And as long as that 8 stays above the 21 on the weekly, I'm pretty bullish overall. That doesn't It's not necessarily the only indicator, but I'm good with the markets. If you zoom into the dailies, the same thing. You got the 8 above the 21. That happened way back here on April 28th. Since that time, we've been in a full bullish mode until right about now. And now you're getting those getting tighter, starting to maybe roll a little bit. We'll see. The weekly, says we're still bullish. I think it's good. The daily says, yeah, maybe a little overbought here on RSI. Things are dropping down. This pullback has been pretty nice, giving us some better opportunities now than we had. So I'm not as concerned about being overbought as I was, at least not on the daily chart. So I like it overall. So ES looks pretty good in here. I like the pullback. Can we continue to fall? Sure. We've got the bearish PSAR on the daily. Okay. But we still have the 8 above the 21 way above the 50 way above the 200. Plenty of support levels here. I think this previous pivot level back here, right around this 6160 level, I think if we pull back, that would be an area that maybe I would be watching to see if things get worse to there. But the 50-day looks pretty good. So bullish. I'm not as much cautious anymore. I think now the pullbacks are opportunities to start to poke around for some things. And I think if we get a really decent sell-off to the 50 or back to the 6160 level, that's going to be an opportunity for me to, I think, buy into more SPY. So I like it. Overall, what would I be doing right now? I think the 112 trade is fine. I also think a strangle trade here on ES is not a bad spot. We pulled back. We're right at the 21. We're right at the 50 on the RSI. We're a little overdone here still on the weekly. So maybe a little bit more of a down move on the weekly would be helpful. But I don't think it's a bad spot. And Igor was looking at iron condors as well today. I just think a strangle on ES is not a bad spot right now for this, at least around 60 to 90 days out. All right, so there's some opportunities there. If we take a spin over to oil, oil has we've had a drop here. Much of this is demand concerns, is demand waning on oil. Yeah, maybe a little bit, but you've always got oversupply. Russia's oversupplying for sure. Everyone's going to buy the Russian oil anyway. And then, OPEC is not really doing much to curb production. So that's also going to weigh on oil. I just think it's a good spot in here to continue to just do, I think strangles are great right in here. And I still think that a 112 is not a bad play on oil. You could also same thing. I think there's opportunities out there for 112s, strangles, and then on oil, if we seem to find a bottom and reverse, like we did back here on the stochastic momentum back on really this July 2nd or so, that's a spot when you come down to this support that if we start to reverse and start to head back up, like we did here, back above the 50 and what have you, that I think is a good spot to sell naked puts and put credit spreads. I wouldn't be doing that yet on oil until it shows us it's done falling for now. But I think you could still sell strangles in here. You can get good premium on oil. IV rank is 30, so it's not bad on the IVR right now. So I like it. I don't think it's a bad spot at all. Continues the downtrend. I think you've got some support levels that you would have to break through. Key support. It's just sideways, consolidating here. It's been sideways since back in here after the Israel-Iran war spike here. So we'll see what happens, but don't mind it in here at all. All right, gold. Now, gold has had just a massive problem with this 3440 level. It just cannot seem to break through it. It's tried once, twice, 3 times, 4 times, 5, 6, if you count yesterday and today. It just can't seem to break this line, but this is an ascending triangle. a break, I think, of this 34.40, I think that's a very bullish opportunity on gold. So on gold, I would still be 112ing it. I think you can play anything bullish in here if you wanted to sell, even naked puts or something. Wouldn't be strangling it now at this point in time. It's no longer a strangle opportunity. RSI is too strong, moving to the uptrend, stochastic momentum moving up, uh, and getting ready to break out. You are at the top of the Bollinger Band, so we'll see. But eight's above the 21, very bullish sign. We're above everything here, very nicely stacked. And Bollinger Band's opening up from kind of a tight level here. I think you could see a real possibility of gold making a run in here. I'm going to continue to sell the income forming covered call, but I probably won't be as in the money now here. I'll probably be closer to at the money, just generating good premium, but I really believe this underlying in gold moves higher. I like gold. You could do Jade Lizards, you could do 112s. I think bullish trades on gold here are really, really pretty good. And then bonds, you got bonds starting to rally, breaking out of this trend. You got rates dropping. Uh, Everybody and their brother thinks the Fed's going to cut. If we take a look really quickly at Fed Watch Tool, all right, and we're looking at the September meeting in here, 90% chance of a rate cut, 90%. So everybody and their brother now thinks the Fed's cutting here, 89.4% chance that we're going to cut 25 basis points in September. So again, does that affect the longer term rates like ZB, which is the 30? Well, not necessarily, but I think just the Fed entering a cutting cycle should continue to ease rates as well. And you're starting to see a pretty decent little move here. Not great, not a great strangle setup right now. So I'm not really looking at a strangle on ZB. If you were selling put credit spreads, naked puts down around here, I think you're in good shape. We do have a strangle on. That strangle's up 20% in 12 days. And it's up again today. So I like it, but you're breaking out of this range right now. See where bonds go, but overall, right now, ZB, it's bullish, and I'm not strangling it at all. If you've got bullish trades that you like, again, a 112, potentially a Jade Lizard, or just butterflies, something like that. I don't think bonds or TLT set up bad for a call, broken wing butterfly, which is my favorite trade when I think something is making a run that could reverse. I don't want to limit my risk. To me, the broken wing butterfly is the best active trade you can do on this, and I do them in a 2-to-1 ratio. We can take a look at that later if you want. NASDAQ, see all the comments on ES. It's pretty much the exact same thing. And then here on small caps, Russell 2000, nothing doesn't look great. It's had a nice pullback. Okay, you're right at the 200, the 200 and the 50 are kind of colliding here. This might act as a decent support level coming off of these oversold levels. It's been a good strangle. I think it's still a really good strangle opportunity right now. I think there's not a lot of catalyst for small caps to crank it up because I think tariffs are going to be a headwind for small caps, but I also don't see a reason for things to tank with the economy being decent. So I think a strangle is not a bad thing here on RTY. We'll quickly look at silver. It still sets up decently as a strangle, even though we've moved down. I don't think this is a bad spot on silver. There's nothing I would do here. On copper, I'm not getting in this thing at all. Don't like it. Not going to trade it on that move lower. And then the Aussie dollar just continues to be always a great strangle opportunity. But if you have a large account, you got to watch fees a bit on that. All right, there's the main indexes and futures. So we've got some trade opportunities there. Let's look at some stocks here. I mean, in the Discord, there's a question about, what about this for PMCC, this for PMCC? There's probably one a day of those. Look at the criteria that I have and let me know if something fits in. So if we're looking at Amazon, does it really fit that profile? Well, if you look at it, are we uptrending? Yeah. If you look at the weekly, we've had a nice uptrend here. What is in the world is this one? The 325, I believe. Hang tight. I'm just going to remove that. All right. So 200 day is moving higher on the weekly. You've got the 8 above the 21. That's always a bullish sign. You've got the 8 now crossing below the 21 here, which I think is in this pullback in Amazon is giving you an opportunity. It doesn't fit all of my criteria here, which is I like 20%. So I like growth stocks for the income poor man covered call. I like stuff that's strong, growing stocks. Okay, a little bit of volatility is not the worst thing either on those. And Amazon on this pullback, giving a little bit, but the IVR is only about 8 on these. But let's take a look at Amazon here. So if we look at Amazon, and let's look at some of the fundamentals. Okay. Your revenue is about a 13% growth. I'd like 20. This is a well-established company. It's pretty good. If we look at annual rates, I mean, it's definitely been increasing year over year. But right now, about 13%. It's not 20. It's not the greatest, but it's not bad. And then earnings per share growth is 33%. So the EPS growth, well over 20. Okay, so not great on revenue, earnings per share, they're cranking it. Then if we go down here and we look at the balance sheet, the return on assets, or your return on capital, your return on equity, essentially 11%. I'd like 15. It's not bad. It doesn't meet the qualifications exactly, but it's not it's not a bad opportunity. It meets most of the criteria. It doesn't meet them all. I kind of like Amazon in here. I think we give this thing another day or so to figure out what it wants to be. Momentum is definitely down. Um, so I think that's important. Why do I want high growth stocks? That's a great question. So from Brian, why do you want such high growth? Well, I want something that's going to go up. Yeah, if you're going to sell at the money or in the money, don't you want something steady? I want higher growth stocks that have a little bit more volatility in them than a steady grower, because otherwise I'm not going to get uh, enough extrinsic when I sell them. So on Amazon, when I'm selling these, it's hard to get a lot of extrinsic value out of it. I need something that's a little more stronger growth oriented. Even though I'm selling at the money and in the money, I want a little bit stronger, not a little bit weaker. I do have trades going on, unlike Berkshire Hathaway, which doesn't exactly meet all the criteria. So that's a little bit of a slower grower, but and it doesn't always set up perfectly. I really want something that has a little bit higher growth. For me, that over the long term, I want something that's really going up because A, I want more volatility for my extrinsic, and C, I really want that underlying to be moving higher, even though it doesn't matter as much. Uh, I like higher growth stock. Now, you can certainly modify your plan if you want to put them at 15% growth for EPS and revenue and so forth. That's fine. It's not the worst thing. And there are trades out there that'll do that. And let's when you run a scan on some of these criteria, here's one stock that seems to come up all the time. Lilly. So when we look at Eli Lilly here, okay, Look at revenue growth, 45%, monstrous. Earnings per share, 30%, monstrous growth. Okay. So Lilly is just a monster grower of revenue, earnings per share. And then when we look at the balance sheet, when we look at the return on capital, 26%. This will come up on every single scan that you do because, frankly, this is one of the greatest stocks on planet Earth from a fundamental standpoint. And I think it works well here. It's uptrending overall, but it's kind of sideways and consolidating a bit right here. We'll just keep extending this piece out. You're in this symmetrical triangle on it, trying to hold the bottom of the trend line. It's just not a bad spot. I want RSI over 35, which it is. Okay. It's at 46. It's not quite over 50, but it's decent. And the only problem is it's below the 200, and that I don't really love on Lilly. However, that being said, on the weekly chart, it looks still pretty doggone good from a weekly chart, and I think you're getting a decent deal. So this thing meets the criteria, except for the fact that you're below the 200. So just because fundamentally it's a strong stock, and look at the earnings, it pretty much beats almost every single time. We didn't beat back here. Okay, we had a small downside miss on revenues, but that was back in 2024. Since then, we continue to beat. We have earnings coming out again. This thing just routinely pretty much beats earnings. So I'll wait till Thursday. We'll see what happens. I'd like to see this thing start to move higher, but because it's teetering at this level, I'm going to wait till earnings, then we'll look to get in on this thing. But I do think Lilly meets a lot of that criteria. All right, let's get on back here quickly. So Amazon, fine. Nvidia, yeah, it's a great stock, moving to the upside. Okay, earnings are coming up, but not for a while. RSI was overbought and tipping over. I just don't see a great risk reward here. Hood pulled back to the uptrend, bounced off to 21. I think it's a better opportunity than it was a week ago. I'd love to see a little bit more of a pullback on it on Hood, but it's not a bad spot. Now Hood's getting into this range where you got to beat big time every time, and if you and have great guidance because it's moved up so high. I'm in it. I don't know if I want to add to it yet. I would love to see some sort of a bigger pullback. Palantir, off and gone. If you're in it, great. And I always say I'm not chasing it. And even if you had chased it, you'd probably be doing great. I just can't do it. If you're in it, congrats. I'm in it with one naked put that's almost at maximum capacity. All right. Here, Tesla. I think Tesla looks pretty decent overall in here. It's just really consolidating sideways. I'd like to see it get some momentum back under it in here. I don't know what this. I have no idea what this is down here on here, but I think Tesla's not bad in here. I just wouldn't enter now. We'll just continue to. I like sideways to growth on this thing. Meta has taken off. I think that's good. Hang tight. Let's see if we can clean off. I can't do it. All right. It's taken off on Meta. Great company. It's got a gap to fill now. I think we just be patient. I don't think you have to rush in on this thing. I think we wait to see, can we get a gap fill? If we do, then I'll wait on that. Apple, it's just been struggling. It can't seem to get anything going on it. It continues to be in this sideways trend. I just don't love Apple. I don't see any reason to trade it or buy it or own it at all right now. It doesn't look great long term. and it doesn't look great short term, so I'm not in it. Google, been in this nice uptrending channel, getting a little extended here. I can't get in at this point. Microsoft, I can't get in. It's just too extended. I need a pullback. Costco, it's had a nice bounce the last couple days. It's at the bottom of this trend line. It's been at the bottom near this near its Bollinger Bands. It's back above the 8, moving its way higher to sideways, down a little bit today, but it's had such a nice 3-day move that I'm fine with that. Things are really starting to improve and look decently, I think, uh, on Costco here. I think if you look at the long-term trend, this is giving you a pretty nice opportunity in here. If you're not in, I like Costco. Hims, this thing gaps, runs back up, gaps down. Let's see what happens here. I think you got to give it a couple days to sort things out. Good earnings. Okay. On the earnings side, that was decent. Missed on the revenue side, and it got clocked because of that. Again, if you don't have everything perfect, you're going to get hammered. I think it'll probably recover. It was way up today. Now it's back off. I don't see a reason to jump in, but not yet, but soon probably. JP Morgan, I like the sideways consolidation here. I think this thing is setting up decently for an entry. AMD, we're going to see tonight. We got earnings. So earnings are after the bell tonight. It's had a big run up. It could really take off or potentially tank after earnings. You have no idea. I like the company a lot more now. It had just been terrible. I think you just wait and see what happens. I don't think you chase here. SoFi, I think nice consolidation. I think this is not a bad spot to start to leg in on SoFi. All right, Uber, like the stock. It's broken its uptrend line a bit, so it's broken that. I'm not in right now. I think this is not a bad spot down in here for this thing. Oversold, starting to make its move. You got earnings coming up on Wednesday, so you just got to hold off. Netflix has been, I think, a decent opportunity. Very expensive to get in here, but I think it's oversold on the daily chart. I think the pullback here on the weekly is not bad. I don't think Netflix is a bad opportunity at all. And then we talked about Walmart the other day. I really strongly suggested Walmart for you if you were looking for something on the income poor income recall. I think Walmart might have been your stock. It was breaking this triangle. Now it really has taken off. Now I think you got to wait a little bit for the pullback. All right, Berkshire sold off on earnings, trying to hold. Nice little bounce today. We'll see how things go. But overall, the weekly still looks good. The pullback here might be a great opportunity to get in if you're not in, if you like it. The only thing that I don't like about Berkshire, okay, and if we take a look at Berkshire, here is, and I have no idea where this annotation came from, but I'll get rid of it soon. But uh, revenue dropped. I don't like that. And earnings per share, well, that was amazing. But the revenue dropping is a concern. And then balance sheet wise, return on capital is so incredibly low that they have so much cash. You buy something already, but they're not buying because I'm not saying, for same reasons I'm not buying anything is I just don't see things on sale right now. And I think until you see things on sale, you just hold on to what you got. Boeing, I love the pullback to this previous pivot level high. It bounced directly off of that. I really think this is a great opportunity on Boeing here to get in. So I like Boeing. I think it's a solid company. If you run some of the numbers on Boeing. Okay. Just a quick look. If you're doing something on this, 34% revenue growth for a company that size. Okay. 57% earnings per share, growth over the period. So a lot less bad, I guess, is the word. So it's not really growing, but it's up. And then if we look at the balance sheet, okay, still struggling here, and this is the biggest problem that you have because you've got uh, this massive amount of liabilities and this total equity being negative in here. But overall, I think things are improving on this company. You've gotten two good earnings quarters now after three bad ones in a row. And this thing had just not been consistent on earnings. So I don't think it's a bad spot in here. And I think maybe they finally got their stuff turned around. Other than that, we already talked about Lilly. I think that's an interesting spot down in here, but you got to wait for earnings. And then UNH, just holding this bottom after this sell-off after earnings down here, starting to make some recovery. This thing is definitely oversold weekly and daily, oversold levels. So I think it's not a bad, uh, not a bad spot. Hang tight. Okay. All right, got rid of that finally. All right, so I don't think it's bad on UNH. It's a little bit unusual for me, but this was a value play for me on UNH. I think they're almost too big to fail. I think the new management will get this thing turned around. I just thought it was a good value opportunity. I'm using a poor man's covered call on it right now while it's here, but once it starts going, I may switch it back to a standard poor man covered call or out of the money. But I couldn't pass up what I felt was, for my long-term account, a value play. All right, that's pretty much it. If there's any others here, let's just take a quick look at Bitcoin. Bitcoin just consolidating in this area, has been selling off. Momentum is definitely down on the weekly and the daily. We're nearing some support levels. And I think that's where we start to draw our line is, can we hold the 110 level? 110, I think, is very important on Bitcoin. If we break that, I think there could be some selling, but I really think Bitcoin holds in here and then makes its way higher. IBIT, same basic premise, since it's the proxy that we use. And if we look at this trend line, we're right at it right now, bottom of the Bollinger Band. It's not the worst spot if you're bullish on Bitcoin overall. And then MicroStrategy, same type of a thing. And if we look at MicroStrategy here, now it did not hold this particular level that we had up in here. That may flip to become some sort of resistance for it. Bottom of the Bollinger Band, still above the 200. Okay, you've been falling on RSI here. I don't think it's a bad spot on this. And if you wanted to ferret out a support level, okay, that's it right there. Okay, so that was previous support here, previous support here. So we've got this 360 level roughly. On MicroStrategy, anything below that would be a potentially problematic, but we're going to continue to sell in the money on this thing. Nice juice. Okay, if we look at the longer term here, it's had its moments, but really it's still been trending up over time since the middle of 2023. Is it overdone? Maybe. They own a boatload of Bitcoin. Okay, I think they'll be fine for it. Same opportunities. And Ethereum getting a little bit of a pullback. So if you wanted to play like ETHA or something like that, I don't know if it's ready yet. I mean, you're fighting a downtrend. I'd just let this thing go, see where it hangs when it comes to 221. I would be just holding off. All right. So there's a bunch of trade ideas. Let's go put some on, or let's go and check out a couple modeling some trades. All right, yeah, okay day today in the market. For us, I mean, we're up, we're down, we're up, we're down. It's just kind of a flat day. Uh, but oil, we've already talked about that. We have two trades on. So we're sitting here on a 112 trade. It's down a little bit, not too worried about it. It's only been on for 7 days, and oil's been selling off. So that's totally fine. We are not in the trap. We're not close to the trap yet, and we're nowhere near the 52. And then the strangle here, it's fine. Just sideways, nothing to do with on the strangle, way away from the 50 on that. So nothing to do there. ES, we have a naked put of a 112. It's up 72%. Right now, we're 36 days in trade, so I would expect this thing to hit 90 in the next nine days. All right, so that's fine. There's another one at 46% in 22 days. Okay, we're halfway. I normally figure 45 days, and we're at 46 and 22. Now we're pretty much halfway on that one. And then if we look down here, we have another one. This one's down a bit right now. It's only been on for 8 days. It's fine. Nothing to worry about on that. And then we do have a 120-day naked put on. That thing's up a nice 12% now in 4 days. So I'm liking that. So we're good on ES. iPhone, whoever you may be. I don't know which ES trade you're talking about because we have a couple on, but if you're talking about, I assume, maybe the 112 from Monday, this is where we are on that trade, the 425. And I believe these go with it as well. So we're up $100 on the put debit spread, and we're down $700 on this one. So nothing to do on this particular trade at this point in time. The only thing I'm really looking at, it would be, hey, if this naked put gets to a 2x loss, which we're nowhere near the ballpark, we're only down 35%, not 200%, then I would close the trade on it. So nothing to even, we're not even in the ballpark to it. We just let it cook. We're only 8 days in, so typically these take 45 days. So we've got another month plus for this thing to work its way around. All right. So there's those trades. Gold, yeah, these are great. Okay, Jade Lizard's up 74%, and the 112 trade we had on, it's up 90% now. I think it's time to take this thing off. Let's go ahead and close. See if we get filled on this trade, but it's time. 90% winner on this 112, I think would be great. This thing's been on for a while, 21 days to go. What's it look like? Let's take a quick look. Okay. Here's the Jade Lizard, okay, as well. So here's your Jade Lizard. The maximum we're going to get on this Jade Lizard is $740 if we land in the trap. What we really don't want to happen is, even though we have no risk to the upside, we really don't want oil or gold to get out of this trap here, which is going to happen somewhere, right around, what is the top part of this thing? The 3485. So we're only 70 points away from leaving this trap. We've got a pretty nice hump here. So out of $740, well, we're at 540 of it. It's probably not a bad thing if I'll give it a day, but if gold breaks that resistance level that I was talking at, I think it could really start to take off. That 3440 level is what we're watching. So we're not there yet. We're at 34. 28 or so on this particular contract. I don't know why this says 34.14. Well, maybe this is more accurate. But 540 bucks on this particular one. I would not fault anyone for getting out of this. I do not want it to leave this trap. Yes, I won't lose any money, but I don't want to give up the fact that I'm already up 540 bucks to try to make $200 more. Am I willing to risk giving up $300? I don't know. So let's give it a day or so and see what happens. But if this thing keeps moving, okay, we'll look to get out of it. So this is really just showing the T+0 line in orange here. This is where we currently are. And let's put the info on. So this is where we currently are, and you can see we're up 500, theoretically right now we're up 554 on this. The maximum profit here is up here. So what will have to happen would be, again, we don't want to go through this call credit spread. We don't want to blow through this, because once we do that, now we're not getting any income from that, and we're only going to rely on the naked put now. So we want to stay in between the naked put and the call credit spread to get this big trap. Just don't want to give it up. So we could close it today and put something new on. So I think it's a good time to put something new on, honestly, which is why I'm trying to close this other one. So if I don't want to have too many on, so I can't do it. But if you were going to trade today, this is what we would be looking at. The 51 or the 84, I'd probably choose the 51 strike right now. And I'd really start it right around that 24 delta, going about 5 wide for now. And then we'll pick around the 7 delta-ish to start, and then we can play with it from here. All right. So this would be, I don't like this at all. Hang on for a second. Yeah, I don't love, it's not a bad trade. Not my favorite thing. I would like to see, yeah. So again, it's an expensive trade, but we could potentially make $1,120 here in the tail using 16,832. So it's a big boy trade, requires $17,000 in margin, but in the tail, this is a 6.6%. If you drop in the trap, you're going to make a little bit more. Not a lot more, but a little bit more on that. You could widen the put debit spread to make the trap bigger, but I don't think I want to make 890 using 16,586. That's only about 5%. Well, 5% in 51 days is still 10% a week, or 10%, every 10 days, which is roughly a week. So it's not bad to make 1% every 10 days. In here, which would be 3% in 30 days, which is our goal anyway. So my goal is always to make at least 1% every 10 days of the trade. So this gives you a fatter hump down here that if we do sell off, it pays off more, or you stick with the 5 delta, or I'm sorry, not 5 delta, 5 wide on this one. And this thing gives you more income up here, which typically the trap doesn't come into play a whole lot anyway. So I think this would be the trade. All right, so let's put this thing into the Discord as well. Hang tight. Let's put in, so under Tom's resources, there is a Tom's trade ideas. So if you're in here, this is where you'll find these. All right, let's add this. This is from the 8.5 Zoom. Okay, this is a GC 112, and this is at 51 DTE. Okay, so there's a gold 112 in here. You could also potentially look at doing a Jade Lizard on this as well. I'd probably pick something around that same put, and then I like to go right around the expected move, sell the call credit spread, and let's see what this thing looks like. So here's the Jade Lizard, and again, your difference between the Jade Lizard and the 112, same basic shape, but the Jade Lizard, you start with more of a strangle looking piece where you actually start in the trap, and if you go out of the trap, you're not out any money. So this makes 740 on 8,600. So if you think gold's going to run, it may not be the play. So if it runs out of the trap, you're going to make about 2.73% in 51 days, versus if it stays inside this range, we'll make 740 on 8,600. Okay, so you're making about almost 9% on this trade. All right, so hopefully this makes sense for you. Um, there's the Jade Lizard. So we'll put it in here as a trade idea. It really depends on your take on gold, what you think. Gold looks like to me it could be breaking out soon, so I would be a little more nervous. But this is a GC Jade Lizard around 51 DTE as well. Again, so I'm putting these in just so you know. Okay. I'm in Tom's trading channel, Tom's resources, Tom's trade ideas, and usually when we're in Zoom, I post trade ideas in here so you can see them all in the Discord. All right, so let's go back to putting on some other trade ideas. All right. So there's gold trade ideas. We talked, I didn't put anything on in oil because we ran through my account, but if I was going to trade oil, I did say a 112 or a strangle would be a good opportunity. I'd probably go to the 72 DTA, which is as close to 60 as I can get. And I'd probably put on, again, we go about one wide on oil typically. So maybe the 58, 57. And then, somewhere down here, the 50. Let's just use the 49 so we don't reuse the 50 on it. And then we'll see how this plays out. Okay. Let's make sure I get it perfect. All right, so here's a 112 on oil. Not bad, making 670 bucks and $6,000 in BP in the tail. If this thing stays up where it is, I like it. I like this trade a lot. I already have oil trades on. It gives us a $49 put to the downside, which is quite a ways outside of all of the main trouble, but so I'll put this in the Discord at, what is it, 72 DTE. So here's a oil 112. And then if you wanted to do a strangle on oil, for me, I do 90 days. For some, it may be too long for you. There's 104 and a 72. I think the 104 is a little too long, so I'd probably choose the 72 for the strangle as well. And I'd probably do right around this 49 again to the upside level of, I don't know, probably about 88. So if I'm doing a strangle, you can see the skew a little bit in this thing. So we have a little more upside. So there's more upside risk being priced in right now on oil than the downside. But here's our strangle. It's taking in 780 on 31.72 in margin. That's 24%. Okay. in 72 days, which means if we close this thing at 50% winner, we could make 12% on the money. So if you wanted to go wider, you can. I don't know that that's needed, but I think this strangle is not bad. I already have a strangle, but if you don't, okay, I like this one as well. So this is a CL strangle at 72 DTE. All right, so there's a few trades for you. Question, can you do MGC for small to medium accounts? I think the liquidity is very, very difficult. If you're going to do the micro gold futures, you can't even do it in MGC, or at least not this particular symbol. So I can't do it in here. But I think if you are able to trade it through maybe interactive brokers or something, my concern would be the liquidity is not great on it. All right, so there's those. ES, I think strangle is also a possibility on ES. We talked about this, so let's quickly just model a few out. Here's an 87 DTE. You could get down to right around here, just 53.25 with an upside of this thing somewhere around 69.50, which I think is definitely a doable strike. I could take in almost $2,000 on $6,000. This is a pretty nice, attractive strangle opportunity, in my opinion, for ES. Okay. But I can't even fit it on this screen. You can't get it all. You can't even get it all in here. But look at the skew to the downside. Okay, it's a monstrous skew to the downside on this thing. But we can't get it all in, but I'll post this one as well. Let's get the info off. But you can see the strikes down below, so you can catch what the strikes are on this one. But this would be an ES strangle, which I don't think is a bad opportunity as well. You guys can see the DTE yourselves on it, and I think also 112 on ES. All right, let's keep rolling. Bonds, this one's doing great. We're up 20% in 12 days, which is pretty good on it. Nothing I would do here. We did talk about bonds. I would be bullish. So we talked about a potential broken wing butterfly on this because I think bonds look a little bit like a breakout move here. I don't really think they'll do a whole lot, but let's use TLT instead of futures and see if we can get something to work. I have these ranks pretty small. If I'm doing a broken wing, I don't know if this will work. So I'd like to go out around 12 days. We'll do 13 here, and let's see if this works. Okay. I would buy pretty close to at the money. I don't know if this thing's going to work out right. There's not enough strikes in TLT to make this thing work. Maybe. Let's see. So here's what it would look like in a perfect world, which okay. That's not a terrible setup. But I like 2 for 1, which what does that mean? Well, I like the lower spread. I like that to be twice as wide as the upper spread. So the debit spread, I like twice as wide as the credit spread. So this is the shape. So we have $25 to the downside. We have 20, so we can lose 24. We can make 26. It's not the world's greatest setup of all time. But if you happen to get it into the tent here, you can make $76 or anything more than 25, 30, 40, maybe 50 if it gets into this range, which is the goal of these trades. So this is not a bad trade here on TLT. If you're bullish on something and you think it's going to, going to move higher, that's my typical setup. Don't think I would do this on TLT necessarily, but there are other trades that we think are good, but I can't get into them from a standpoint of, let's say, Robinhood. So let's say Robinhood's had a nice pullback. It might bounce from here. If I was going to do it on Hood, okay, here's what I would do. Okay, so you have limited risk. So there's a 10-day and a 17-day. Let's use the 17 and just see. So I typically will buy right around here, right around at the money, and I'll typically buy this, and then I like 2 to 1. I'm going at the expected move. So if the lower end is twice as large as the upper end, okay, it's kind of something along these lines. Let's take a look, and this is what your shape looks like. Okay, um, then we play with it a bit just to get it to fit. If this was your opportunity, here's a broken wing butterfly on Hood. Okay, putting one of these on, my risk is limited. I could lose 158. Okay, if it moves higher into this trap, okay, I can make as much as $300, almost $400 in here. And if it blows through my trap, I make at least 144 bucks on the whole trade. So if you're bullish, okay, and it blows through the trap, I'm going to make 144 bucks, okay, which is a pretty nice return on $157. Okay, so it's going to cost me 157, okay, and I can make 148. I could make as much as 448 on it. So I like kind of the 2 to 1 ratio. So this is like a 6 wide down here and a 3 wide up here. So again, I'm twice as large on the long spread than I am the short spread. Does this make sense for you? It's not a bad trade. If you're bullish on Hood and you think it can move higher here, okay, after earnings, pulled back, is it getting going? Maybe. Okay, what's another stock that you think, could potentially take off from here? Google's another one that's right there. So Google's another possibility. Microsoft's a possibility. HIMS could run up. AMD, you got earnings coming up on AMD. SoFi is another one. So if there's stocks that you think could really run up, okay, this is your shape. Okay, this is how I do it. It's pretty simple. Okay, let's post this into the Discord. This is the Hood broken wing butterfly. Okay, and I did this one at 17 DTE. You could also look at like the 10-day or something. But to me, I like these trades. If you want to be discretionary and you want to be active trader, then these are potential, I think, trade opportunities if something's going to move. I don't know what else is really moving here. The market's a little bit, stagnant right now, but there's one on Hood, gold or GLD. Since I'm really bullish that gold could potentially break out here, we could do something similar on gold. Let's see if GLD sets up for it. I'm going to buy at the money. I usually will buy right around the expected move, and then I will sell in here somewhere. But I want to make sure that these are almost 2 to 1. It's not quite 2 to 1 on this. So we might have to play with it a tad. Okay, come on. Okay, there we go. All right, so here's your trade. I like to get more of a 1 to 1, risk 1 to make 1 if it blows through. It's not setting perfectly for this. Definitely, definitely a harder one to get, but something like this might not be, oops, something like this one may not be bad. So if you think gold is about to break out here, okay, this trade will cost you 88, or I'm sorry, 88 bucks. Okay. If this thing just doesn't go anywhere, we're going to be out 88. If it rallies into this tent, we can make $200 on this trade. Max profit's 214. And if it blows through this in the next 13 days, which means we get to 316, looking at GLD, uh, yeah, I don't know. It may run up there. You know, we have to wait and see on GLD. It's not the same as GC, but if it's going to keep moving, yeah, well, its probability is low because this is a bullish trade. So it's a directional debit trade, and your pop's always going to be low. So if you're a premium seller, you're not used to seeing pops down here at 45% or something like that. But the risk reward is unbelievably good. Okay, so I'm risking 88 to make 110 at a minute, you know, if it blows through, and I could also make 215. So you're risking 90. You've got a 2-to-1 risk reward if this thing moves higher. And I just needed to get to around 315, which would be the top of the Bollinger Band. I don't know. I'm not saying that this one's going to work. I don't love GLD the way it looks on the chart. So that's not probably my favorite trade. Don't know that I have any that really set up perfectly, but if you're really bullish on something, this is, in my opinion, the way to trade it. Google might be another opportunity to trade Google. Let's do the 17-day. And see what Google looks like if we do the same type of a thing on Google. Here's Google. I'm going to risk 132 bucks, okay, to potentially make 370 in, at the top of this trap. You got to hit it perfectly, which means you have to have the duration and the move have to be exactly correct because this is only at expiration. So in 17 days, it's got to be perfect. If it blows through, I make 121 bucks. On 132, that's still 100% return on a trade. Why such a short DTE? Because I'm looking for breakout moves right now on things. If you want to go longer, you can. Let's say we want to go 30 days. And now I gotta totally change things around. This is hard to do. 30 days, I don't get the right strikes. Can't really make this work out here. Yeah, I can't make it. I can't make the Google one work this far out. But if you want to go longer term, you can. If you have a bullish bet on something, if you want to go, let's say 45 days out, Google just doesn't have enough strikes to do this because I need that 2-to-1 ratio. I guess I could do something like this, okay, and set this up. Okay. So if you want to do something longer term, all right, are you bullish on Google? All right. Well, if you are, you can simply just buy a call for $6. Okay. So you could buy the 200 call for $6 out 45 days and have unlimited to the upside. With this setup, okay, you can also lose the entire amount, but with this setup, I could risk 237 to make 263. So it's a 1-to-1. If we run higher and if we happen to hit it right and put it in the tent, you can make 760 bucks on your 240, 3-to-1 risk reward. But you'd have to be right here at this exact strike 45 days from now. What do you think the odds are of that happening? Okay. Doesn't mean, but if we move higher, you're going to start to make more money anyway. And if you blow through it, there's no risk. So I like these for this particular reason. I like the broken wing butterfly. Uh, I think it works well on bullish stocks that you think are going to be moving higher. But yeah, you can certainly do this longer time frame. 45 days, fine. Okay. Give yourself time to be right on this one, and it would work. Okay. So if you want to make a nice bet on this thing, you could do that, and you can make yourself 261 on 238 bucks. So almost 100% return if you blow through it, and more than that if you're in a trap. Make sense? Yeah, GC is going to look much better because it's got more strikes, and it's also a better looking setup on GC if you're going to do that. I just am looking for short-term trades, okay, because I'm looking basically at a swing trade type of a thing on this. So if I did, so you did 10 days, or you modeled 10. 10's fine. 13 I like. 12 is my sweet spot. Okay? But I could go something like this. Okay, model this one out. Hate that Tasty does this to you. Okay. Something along these lines in here. So if you want to put this thing on here, let's go. This is 34.10. It's 45 here and 20 here. Probably pull this one up just a fraction. Okay. Something along these lines. All right, so this would be potentially a setup in GC. So I'm risking 940 bucks. Okay, but if it goes into my trap, I can make up to $3,000. And if it blows through it, okay, over time, depending on the time. So look at the T+0 line though. Okay, so over time, that line is going to lift if we're bullish. Okay, if it doesn't move higher. No, so we don't automatically we don't get to these levels until you have to wait until expiration. Any butterfly trades, you really have to wait till expiration to get the full boat. All right, but there you go. So there's one on GC if you want to do something like that. Hey, you want to risk 940 bucks. If you're bullish, you could potentially make $2,000 to $3,000 on this, or at least make 100%, if not 200 to 300% on your money. Okay. That's the difference when you're taking these trades versus selling premium. Okay. But if I'm going to go long, this is probably more my favorite strategy if I'm going to be long on something. Okay. All right. Hopefully that made sense. There you go. Nothing to do on any of these other trades. Gold, loving this trade right now. So we're up nicely. Nothing to do on this covered call. There's still 260 bucks worth of extrinsic on it, even though we're in the money. I don't care. Nothing to do there. Okay. IBIT, still have 790 of extrinsic with 3 days to go. Nothing to do there, although it's up a nice 60% in 4 days. You could potentially take this off. So we're more than 50% in 50% of the time. So you have the opportunity to take this off, and you could roll it. If we did roll this thing for the same expiration, and we could roll down for a credit, so we could book right now. We've made $1,400, 60% in just 4 days. We have 3 days to go, so we still have some time. And I would like to keep getting some extrinsic, so I could technically roll this down 1/2 of a strike to the 63.5, still collect 1% on the stock. But since I own this thing at $23, okay, so I own it at 23. If I sold this thing for 62 cents, okay, it's going to give me 2.6% return. So instead of 1%, extrinsic because I own, 1% of 64. Okay. Is this 61 extrinsic here if I rolled it down? So I get my 1%, but because I only paid 23 bucks for this thing and I didn't pay 64, okay, I'm getting almost 3% still on this trade, and I can book my profit. So, hey, why not, right? Uh, so we can still get another 2% by Friday in the money. So we're going to get 2% of our extrinsic by Friday, and I'm going to pull 1,400 bucks of cash out of this stuff. Yeah, my goal is I want to make roughly 1% on the stock price of extrinsic every week. Okay. Give or take 0.75 to 1% of extrinsic every week based on the stock price. Then when you really, but if you own the stock, what's one thing? But if you own the leaps, okay, at a fraction, which is 1/2 to 1/3 of the stock price, you technically are going to make like 3% a week on that extrinsic over time. All right, MicroStrategy. We didn't quite hit 50% in 4 days, but we are up a nice 1,800 bucks on this thing. Okay, it's fine. The stock is dropping a bit, but we own the in the monies. Okay, remember, I think we did these things almost $20 in the money, and we've already pulled out almost $1,800. We got another 900 to go. So if this thing stays above 365, okay, we're gonna make almost $4,000 or more, almost 5,000. Okay, I like that. Okay, and then so this is why I like selling these in the monies on this thing. Okay, I don't care about the fact that it's losing if the stock's going up. I care about getting my extrinsic out and giving myself stock protection. Okay, so we are doing okay today. The market's down. The underlying is down almost 350, but we're actually only down 60 bucks today because we sold in the money. We're still getting our extrinsic value. We still have 200 bucks to go on our extrinsic, and we bought ourselves in the money protection. In fact, we have $6 more of in the money protection if we keep going down. Same thing with SPY. Okay. We're totally fine on these. Okay. Nothing to do, nothing to sell. Okay, just make some money. All right, we didn't get filled on this one. If we do, we'll post it, and that's it. All right, this is a long one today. My voice is fried. I got to jump here today. I hope this was helpful. Give you a lot of different trade ideas, some different strategies. Talked about the broken wing butterfly as well, and looked at some trades. And I'm squeezing a little bit more extrinsic premium out of this IBIT trade if we get filled. Okay, so I'm going to make 1,400 bucks in 4 days, and I still have a shot to make even more, another 60 cents on this. So another $600 by Friday. So either way, I'm going to make 2 grand by Friday for sure. And I really don't even care what the underlying did. What do you want me to look at cost for? The chart, what are we looking at? What do you want me to look at for you? Please look at cost. The call. All right, so you want to look at the covered call that we had. So if we're looking at Costco, we've had a nice bounce off the bottom, just hanging right in this spot here. We don't own Costco in this main account. We have it in the Lazy Trader account. So we'll switch counts and we'll go take a look there as well. So not bad. Nice little move. We talked about this earlier on Costco. I think it's fine in here. And here's the Lazy Trader account. Having an okay day in this thing. So we're fine. In fact, we also have that IBIT in here as well that we could potentially roll this one down. I know I'm deviating from you guys, but let's take a quick. Okay. If we rolled this one down, geez, we could roll it down to here on IBIT and pick up all kinds of stuff. We're going to do that here too. So I'm going to roll way down on this one, and we're going to take our 1,800 bucks that we made, and we're going to make some more money. All right, Costco. All right, so Costco. All right, the question here is maybe what would you do? Okay, well, we have made 50% in 50% of the time. We only put this on as a 3-day trade. It's not ideal that the market's gone down 11 points today or stocks gone down, but we've offset almost all of that loss. Okay. So when it goes up, we gain. When it goes down, we offset some of the losses by staying in the money. We could probably roll this one down as well. Okay. So if we wanted to roll it for this Friday, I could potentially roll this thing to an at the money. I'm getting a ton of. Nope, there's IBAT in this account. Man, it's not 1%, but it's pretty good. I could roll down to this 942 and still get more extrinsic and take the win for what we have. So I think that's good. So I'm going to roll this Costco one down. Okay. So we're going to roll down. We're going to book the profit that we had. So we rolled down on IBIT and we rolled down on Costco to get more extrinsic value out of our trades. So Rick, thanks. I hadn't even had a chance to look at these things yet. Berkshire, nah. Boeing, nah. Amazon, nah. MicroStrategy, nah. We've made almost $4,000 on it in 8 days, or in 4 days. That's not bad. And then I don't have any others really. I mean, nothing to do, and nothing to do on this one. Okay. And we sold this. You know what? We've taken out on UNH, we've taken out a large chunk of our extrinsic value on this thing so far. We're only down to 284, but I'm going to let it go. On this, we have an in the money call. UNH is up great today. It's fine. Okay. So nothing to do on this one right now because you've got plenty of extrinsic left. So we're going to leave these alone. All right, good. There, we made a bunch of money today, booked some profits. I'll get these trades posted in the Discord shortly here. Let's wrap it up here, and I'll see you guys back in the Discord. All right, good stuff. Good session. Thanks, Ray. Made me some cash.